India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It is a Tuesday morning. Rains continue and it's a rainy, wet morning. Pleasant, I must add. We, of course, track markets. The cabinet, we know the composition of the cabinet now. There is continuity, and I think that's a big talking point for markets this morning. I am Prashant. With me, my colleagues, Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. It's only Tuesday, Prashant.
Yeah.
Okay.
Pleasant weather, but here in Mumbai.
True.
It is pleasant.
Yeah.
It is pleasant and much better than what we've had over the last many
Indeed.
weeks now. But, you know, what's the weather for the market looking like? I think that's what we try and kind of tell you every day in the morning. It's not looking bad. It may look like that global cues, etc., a little sort of stacked up against us. But I think the big takeaway for the market is going to be what I said. Still, the political sort of, circle coming together in a decent way. There is continuity. I'll get to that in just a bit. So yesterday we saw a bit of a pause and the Nifty took a halt. It's been a spectacular market, rocketing higher. Can't have 1.5-2% days every day. We were saying this yesterday. And we ended flat, 30 points lower, nothing really. But it was a daily negative close, which we've not had for the last 3-4 sessions now. FIIs were biased for the second straight session. If you can have the graphics up, yeah. So 7,000 crores in the last 2 sessions. So it's slow, it's small on a daily basis compared to the quantum of selling that we've had. But 2 days in a row now, they've bought. So let's see and hope this holds. Now, most key ministers return in the NDA. If you look at the sort of big four ministries, home, finance, etc., there is continuity. And I think that is good news. That is unambiguously positive. The worry at the margin, of course, was that the BJP, because it needs its allies, the JDU and the TDP, will have to give away some of these important ministries. Not the top 2 or 3, but even, actually, if you look at the top 5-6 ministries, there is very little change except maybe the power ministry. This is the cabinet, which I think markets have seen for the last 5 years, 10 years, and that continues for another 5 years as well. So, able hands, experienced hands, and not very much dilution in terms of the power, especially with regards to running some of these individual ministries. So now markets, of course, the composition is the same, not very much change, but will there be change in priority, focus areas, etc., if any? I think that's the next thing. And naturally, for example, yesterday there was that Kisan Nidhi program, there was the talk about the rural sort of housing scheme, crores of houses to be built, the government sort of going to support that. And what else? I think this is going to be the focus area in terms of this new particular government. And if there is any change, I don't think the markets are expecting any change. It's expecting more of the same in terms of the policy thrust as well. Overnight, you had equities which were higher. Nasdaq ended about 1/3% up. The 10-year bond yield was up 3 basis points. It's rallied 18 basis points in 2 sessions. We are back around $4.5 index. Flat but above 105 levels. Oil prices are the big mover. Actually, if you want to sort of pick out one thing, it's oil. 3% back at about $82 a barrel. And we've come up from 76, 77 very, very recently. So that's at the margin a bit of a negative. The big events are, of course, the CPI, the core CPI specifically out of the US, and FOMC, which is tomorrow. Later in the evening. They are top of mind events for the market. Now, where do we go from here for the market? Typically and ideally, there should be a bit more consolidation, sideways movement. Is it going to be a deeper pullback? That's a very tough question to answer. It'll evolve. It'll have to, the price action will have to tell us over the next couple of days. So I'm just going to leave you with some supports for the market. So support for the Nifty comes in around 22,900. That's the 40-hourly exponential moving. The 40-hourly exponential moving average is 22,939. And the first support comes in at 22,900. The 20-day comes in at 22,676. That is still a little below where we closed yesterday. Now, Bank Nifty supports come in at the same 40-hourly exponential, which is 49,328. And if the Bank Nifty were to move a little sideways, we essentially are looking at targets closer to 48,900. On the way up, I mean, I think both for the Nifty and the Bank Nifty, it's pretty decided. For the Nifty Bank, it should be yesterday's high and then, of course, the all-time high, which is 133. My gut feeling is that I don't think we will see any deeper pullback in that sense. It's going to be largely a healthy screen over the next couple of days as well, with enough participation as far as broader markets are concerned. GIFT Nifty up on your screen. We're getting a 40-odd point higher start at about 23,287. Surabhi.
Pullback, Prashant, I guess when you have that tidal wave of money coming in month after month, 34,000 crores in domestic mutual funds at last count, I guess that's why we know that pullbacks are so shallow and all the dips are literally getting bought. On oil, just want to make that point that it's still holding. It wasn't a flash in the pan kind of a move because even now, Brent prices are above 81 and the chatter obviously has been a little about US summer driving demand. That's one, and there's some talk in the market about US perhaps buying more to build up its reserves. And that kind of kept prices elevated. Goldman Sachs, by the way, thinks that oil, the upper range this year could be 90, and it's expecting oil to remain firm and inch up a little bit as we get into the third quarter of the calendar year. So that's on oil. Yields are also elevated. So, I mean, basically, we're not looking at a very great global backdrop, but then the thing with this market is that dips are getting bought. So let's see if that continues to play out. I just thought I'll quickly, get our producers to help us with putting up the pictures. The old guard that continues, absolutely no changes. And some of the new faces that have come in. Now, these are ministries which are very critical to markets. I mean, they're very closely linked to economic policy, financial policy. So let's get the names going. Of course, the top ones don't change. Finance remains with Nirmala Sitharaman. Defense, we know defense is absolutely critical the way these stocks have been moving. The companies in focus, Rajnath Singh. Commerce and industry remains with Piyush Goyal. Highways, absolute continuity, right? Mr. Gadkari comes back on. Railways and this huge phenomenal change in the approach that we've seen in Modi 2.0, will that continue under Mr. Ashwini Vaishnav? The minister stays on. He also has electronics and IT, and petroleum and natural gas continues with Mr. Hardeep Puri. Some of the new faces, and again, these are ministries which are important from a market perspective. So health goes to Mr. JP Nadda. He also has chemicals and fertilizers. Housing and urban affairs, these, additional 2 crore houses, 3 crore houses that one is expecting Modi 3.0 to roll out. Manohar Lal makes an entry over there. And he also has power, which is another very, very critical ministry. Civil aviation has seen the change. Mr. Jyotiradittya Scindia is no longer, in charge of that. Mohan Naidu makes his entry there. And he's, by the way, also, I think, he's one of the youngest ministers in the cabinet as well, just about 35 or 36 years old. And coal and mines goes to G. Kishan Reddy, again, important from a market perspective. So these are some of the new faces, but the big heavyweight ministries, there's absolutely no change. So the market will continue to expect continuity. So I guess, Nigel, I think from a political standpoint, after this, I think we can really go back to business as usual. Here and there, if there are, political overtures and, those typical coalition politics that plays out, we'll see. But in terms of overall policy, I don't think now anything changes at this point.
Well, that's right. And we'll also keep an eye out to see what the Fed has to say, right?
Absolutely.
We get the outcome tomorrow. For the time being, irrespective of what the equity markets are doing, some of those other asset classes, they are in wait and watch mode. Whether you're looking the US bond yields, the, Brent crude prices have perked up a little bit, and the dollar index is quite strong if you compare it with what we saw on Friday. So the troika, well, that is reasonably strong. What did the FIs do in yesterday's trading session? Well, they added long positions. Close to around 17,000 contracts is what they added. And they covered close to around 33,000 short contracts. So the swing factor out here is close to around 50,000 contracts. And if we pull up a chart, you'll see that the FIs, they have been gradually, covering their short position. Just a few trading sessions ago, it was around 3.5 lakh contracts. And now, in fact, it's come down to around 1.4 lakh contracts. On the flip side, if you're looking at the client positioning, well, that was net long, close to around 3.3 lakh contracts. The client positioning has come down. So they have cut a bit of those long positions. So we have seen some of those clients which had taken a long stance at the start of this contract, well, they have gradually been, unwinding some of the long positions, and there is some short covering that we have seen as well. Moving to the options data, you pull up 2 strikes out here, the 23,500 call and the 23,000 put. Both of them have seen a fair bit of open interest build up, which brings us to the levels. Just plugging in these numbers, you'll get a broad sense in terms of where the Nifty can consolidate just in the near term. Near-term resistance will be yesterday's high because we came off that high point of the day. So 23,412 approximately, that's the number I'm looking at. As for the options data, 23,600. That'll be an important mark. So that's both the resistance zones you're looking at. But in terms of support, since the 23,000 put has seen a fair bit of open interest, a couple of sessions ago, the premium out there was close to around 200 rupees. So you just plug that number in, 22,800 becomes a very, very crucial zone. And the 20 DMA, that as well as your reference point, 22,671. Today, we'll keep an eye on the Nifty Financial Services Index. That plays out the weekly expiry. So that could move a little bit, particularly in the last hour of trade. The sector that I'm looking at today is the railway stocks. As you all mentioned, we have Mr. Ashwini Vaishnav, who's retained the railways, IB, as well as information technology. So, the street was fearing continuity. Now, that's happened. So I'll keep an eye on a couple of these government-owned companies, IRCON, RVNL. They should be in focus in today's trading session because the last few sessions, the street was a little bit nervous, particularly on the railways portfolio. That could be the sector of the day.
Okay, all right, Nigel, thanks. And you come back here. Let's see how the market reads into this, given the interesting appointments that we saw last evening. Let's move on then to the equity call of the morning. Jonathan Garner of Morgan Stanley says India remains a secular opportunity with the BJP-led coalition likely to redouble its focus on growth rather than shift towards redistribution. He expects volatility to settle back down as evidence that the pillars of macro stability remain upright going into cabinet formation and the July budget. He says India remains first ranked in the Asia-Pacific ex-Japan emerging market allocation framework with key exposures in their focus list including ICICI Bank, Maruti Suzuki, GAIL and Godrej Properties.
Okay, so money market views next. We have Abhishek Goenka of India Forex and Asset Management who says that US May jobs numbers coming in stronger than expected, caused the rupee to give up gains as US rates firmed up and the dollar strengthened overall. He says we have the US May CPI and the Fed rate decision both on Wednesday this week. And of course, we'll see what the Fed dot plot tells us. The press conference will be closely watched as well. He expects the rupee to be between 82.7 to 83.7 over the medium term.
On bonds, Vishal Goenka of India Bonds says that bond yields continue to trade higher in the long end. Post-election results and possible fiscal slippage. He says this week it's all about important inflation numbers with CPI numbers due from US and India as well as the FOMC meeting for further cues on international rates. He says with the announcement of the same finance minister, there could be some relief from the continuation of policy perspective. He expects the 10-year benchmark bond yield to trade in a range of 7.01 to 7.06% today.
Well, a lot of stock-specific action track for you. We get to that in just a bit in our special top 10 segment. For the time being, though, let's run you through the list. We're looking at cement stocks, RVNL, Vodafone Idea, JBM Auto, we have Poonawalla FinCorp. All of them will be reacting to positive news flow, and we have 5 apiece. 5 reacting to positive news flow and 5 to negative news flow. So IRB, Honasa, Interglobe Aviation, TRIL, and KIOCL will be reacting to negative news flow.
All right, we've got someone who watches India pretty closely. Harold van der Linde is head of Asia Equity Strategy at HSBC. He's joining in now to chat with us about markets from here. Harold, good morning. Great to have you with us here on CNBC-TV18. Good to see you back. Prashant this side. So what's been the chatter like post the elections here in India, Harold, with investors?
Yeah, hey, good morning. Thanks for having me on again. You just showed a nice chart which showed that the foreigners had seen outflows. Now, we've dug a little bit deeper into this, and this is how I'm going to answer your question. Because if you dig a little bit deeper into it, and we get a lot of data we've collected from all sorts of different funds, our impression is that actually, although foreigners have seen there have been foreign outflows, our impression is that mutual funds have actually been buying. So it's the sovereign funds or maybe the hedge funds that have actually been selling. And this is the story to a large extent. India is expensive. It's a great growth story. But if the market comes off, you see that the long-only funds, they're going to come in and buy. And I think this is what happened with the elections as well. There's a great opportunity for people to say, listen, are things really going to change? At that point in time, we didn't know what the new cabinet was going to look like and these sort of things. But the feeling is that, no, there's not going to be a hell of a lot of change. So we buy into any sell-off. And that's what happened in India, despite the fact that we've seen these foreign outflows. I think that those numbers are veiling the picture, the overall picture and sentiment a little bit.
Harold, on Friday, foreigners bought. Yesterday, we get this daily data, right? Of course, I mean, maybe too micro to look at these daily changes, but 2 days, because they've been sellers relentlessly, they bought the FIs as a category. What should we expect? I mean, expect them to return on the positive side anytime soon, or what? It's not as if the market's down or anything. I mean, locals are not giving that opportunity. They've been aggressive buyers, so if foreigners come, they're going to buy in at high levels.
Yeah.
Is that going to happen?
No, and this is the big story, right? Actually, that and this is not only in India. You see this in other markets as well, and we need to see this in China actually as well. But it's not really happening yet. Locals are buying, so foreigners are becoming less important in the overall direction in markets. When I started up as a young analyst, which was in the previous century, the biggest buys in these equity markets, excuse me, were the foreign funds. That's really changed. The biggest buys these days are the local Asians, the local Indian, the local Chinese, the local Korean, the local Indonesian. And if sentiment among them is good, then things are fine. But my suspicion is that the foreigners have actually been buying and are continuing to will to buy. Their sole concern when it comes to India is it is just a relatively expensive market. So they're going to wait until these PE multiples come off a little bit, and then they say, okay, now we can stomach it. Let's buy some of these stocks.
Okay. Harold, just to go back to the point on policy, now that we know the ministers, and the ministers are more or less the same, which is fine. Ministers can be the same, but would you expect a bit of a tilt, a shift, in terms of where the government will do the bulk of the spending in the budget? Will you be in the camp that believes it'll remain with the economy, capital expenditure, building more roads and infrastructure, or do you think more of the money is going to go towards the rural side? And how would you sort of play for that then in the market interpretation?
Yeah, for the moment, to be honest, I don't really have a clear view on that. We got to see what sort of policy they're going to implement. So that will take a bit of time. My suspicion is very much based on what you just mentioned as well. Most of the key ministries have got the same people in there. That it's actually is going to be a continuation of what we've seen in the past. India needs to build out the infrastructure. It's been doing so, and that is one of the drivers of growth in India, in my view. So that I'm not overly worried about. What we have seen is, of course, that rural demand has been relatively weak as against urban demand and higher-end urban demand. So there's literally a bit more kind of struggle in the rural areas than there is in the cities in India. So maybe there will be a little bit of a shift, and that might actually just broaden the view on our market a little bit more than what we have at the moment. But overall, we just got to wait and see. But I'm not worried that there will be any massive change in policy. I suspect it's going to be a continuation of what we've seen so far.
Hi, Harold. Good morning and good to see you in. This is Nigel on this side. Good to hear that long-only funds will actually look at India from a longer-term perspective, and maybe the selling that we're seeing is from the hedges, so to call it. All right. But what about other markets? Besides the Indian markets from Asia, I recall in the past you've said that, Taiwan is something that you've liked. Korea is what you've liked. The fear out here is money moving into China? And will they, grab a larger chunk at current valuations? How are you reading this? Have you seen some more money flows out there?
Yeah, we've seen money flowing into China quite substantially. And that is going to come from somewhere. That came from either outside of the region, that also came from Japan, in my view. And maybe a little bit, I think that's just what these hedge fund outflows, they took some money out of India and moved it into China. Now, if you know, and you're right, the flows in India, to a large extent, are also determined by what happens in other markets. So very quickly across the region, ASEAN is quite small, so I'm going to skip over that. Japan, I think, was a story of last year. And we've seen that market really struggles to keep up the momentum that we had last year. So there's been a bit of outflow. In Taiwan, I was in Taiwan last week. Fantastic story on the tech side, AI side, TSMC and these sort of companies. They've performed very, very well. Nothing wrong with that, but some of the key stocks are up 50% year to date. That market has performed very well. So on the margin, it's a bit more of a struggle. In Korea, the story is one of corporate reform and memory prices doing okay. But again, a lot of money has gone into there. So the really one market that stands out is either China, because things are on the margin improving. But China has had a bit of a reset, and now everybody's waiting and seeing what are the policy is going to be. There's going to be some important meeting in July. So I suspect China in the very near term is just going to linger on a little bit. So therefore, India, particularly if it sells off a little bit like we had last week, right, suddenly looks relatively attractive. The attractiveness of North Asia, a lot of that is now being priced in. That was the story since the beginning of this year, but probably not over the next couple of months.
Okay, Harold, good talking to you today. I liked how you put it, right? Everybody's just buying their own home market. It's been a different kind of an environment in the last couple of months and actually the last year or so. Everyone's just buying home. Okay, all right, we'll let you go on that note. Have a great day and we look forward to the next conversation. Have to take a break, but we'll come back with our list of top stocks to watch this Tuesday morning. Welcome back. Well, let's now talk about individual stocks that you need to focus on. We have our team standing by with the list as usual. Nigel, you tell us what's been the whole buzz around cement stocks.
Well, that's right. Yesterday as well, you did see the stocks move up because there was this buzz that there will be increased focus on rural housing. And the cabinet has decided to further expand the Pradhan Mantri Awas Yojana. They will build 3 crore more affordable rural as well as urban homes. And that's why, in fact, the street believes there will be higher consumption of cement. And this decision, they believe, well, it underscores the government's commitment to addressing the housing needs of the nation itself. Under this particular scheme, in the last 10 years, they've seen close to around 4.21 crore homes that have already been built. So this number, incremental number of around 3 crores, looks rather large. Explains why the cement companies were up and maybe they hold strong as well. Regional pockets will do well because of various other reasons, like we've seen the South pocket do well because of Mr. Naidu coming back as the CM. But otherwise, cement could get some kind of support for this. In fact, we'll get an analyst in the next 20 minutes or so to further analyze this piece of news. But let's hop across to Vivek. He's here. He's tracking a bunch of stocks. Vivek, run us through the list.
Well, that's right. So what we're looking at today is 3 large block deals that are expected to take place, at market open itself. We accessed all 3 of the term sheets for these particular block deals. So the first one on our list and the largest one is Interglobe Aviation. Now here, the promoter entity itself, Interglobe Enterprises, which held a little over 37.5% stake in the company, is expected to pair close to 2% stake today via a block deal. The base size of the block deal is 4,266 rupees a share, which is a 7% discount to yesterday's close. The total size of the block deal is close to 3,300 crore rupees. Now, IRB Infra is the other one. Now, remember, just a few days ago, the promoter entity had paired some stake via a block deal. Today, one of the private equity investors, which is Sintra, which is an associate of Ferrovial. Now, this particular entity is looking to sell close to almost 5% stake in the entire company. They held around 24.86% stake at the end of the previous quarter. The deal price range indicates a discount of up to 10.2% equity, and at that particular band, the total deal size is 1,900 crore. There is a lockup of 150 days on further sale of shares in case the entire deal goes through today. And lastly, watch out for Honasa Consumer as well. 2 strategic investors, Fireside Ventures and Sofina Partners, they are expected to pair stake today. The total upsize deal could be close to 2% of the total equity. Fireside Ventures held 5.28% stake. Sofina Ventures held 6.16% stake at the end of the previous quarter. And the total size of this particular deal could be close to 273 crores if the total entire 2% gets sold today.
Abhishek, thanks very much. So that's what 5,500 crores worth of sort of stock coming to the market, largely from promoters, early investors, etc., etc. So block sales are hitting hard. I think we have the external newly taken charge External Affairs Minister talking to reporters. Let's listen in.
Abroad, in terms of how we respond to different needs of Indians when they leave our shores or preparing to leave our shores, and the manner in which we work with other ministries in getting investments, in promoting our exports, in enhancing our tourism flows. So this has been the record so far. Looking ahead, definitely I think the 2 axioms that the Prime Minister has given us, Bharat First and Vasudhaiva Kutumbakam, these will be the two guiding axioms of the Indian foreign policy. So, and together, we are very confident it will position us as Vishwabandhu, a country which is in a very turbulent world, in a very divided world, a world of conflicts and tensions. It would actually position us as a country which is trusted by many, whose prestige and influence will grow, whose interests will be advanced, and I once again deem it an enormous honor to be assigned the responsibility of leading this ministry. I have two very good colleagues who will be joining me as Minister of State, and I, of course, am enormously strengthened by the fact that we have a very dynamic and talented Indian Foreign Service, which has always risen to the challenges, which has always been very committed to taking our national interests forward. So really a great pleasure to meet you all on my first day of work, and thank you very much for coming here so early. Thank you.
Well, that's very well put. India and the role of India to act as a bridge, around the world in a conflict-ridden world. So that's the newly sort of appointed or the External Affairs Minister who's taken charge once again, signaling continuity in what India has done around the world. Well, we'll get you more sound bites of ministers sort of taking charge, and that will happen through the course of the day. But let's get back to stocks. Transformers and rectifiers, TRIL, stocks had a sort of rocketing move higher, and now there is a QIP. Abhishek is here with details. Abhishek, morning.
Good morning, Prashant. So, transformers and rectifiers, they have launched a QIP. Size is about rupees 500 crore. Now, the indicative price is about 665 per share, which is at a steep discount of 9.4% to yesterday's closing price. So, total equity dilution is around 5.3%. The use of proceeds, as mentioned in the term sheet, is that they will use it for funding capex, repayments of borrowings, any inorganic opportunity, and general corporate purpose as well. So, lockup period is about 60 days subject to certain exceptions, and the book running lead manager is Nuvama Wealth, which is erstwhile Edelweiss Securities Limited. Back to you.
Okay, all right, got that, Abhishek. Thanks very much. So we'll watch out for transformers and rectifiers. Back to Vivek then. Vivek, you're watching out for some more names. Tell us.
Well, that's right. I'm watching out for RVNL today. The company has gone ahead and given couple of updates to the exchanges on two orders. Number one is a consortium of Siemens as well as RVNL has emerged as L1 and has now received the LOA, the letter of award, for Bangalore Metro Rail Corp project. Now the total size of the project is 394 crore. Siemens share in this particular JV is 70%, RVNL is the remainder 30%. It's also given another update. They've emerged as the lowest bidder for a central railway project, and this particular project is worth 138 crore. On the other hand, one stock that could act or react on the downside today is KIOCL. The company says it has halted operations of the pellet plant in Mangalore due to ongoing downward trend as far as the pellet market conditions are concerned.
Okay, all right, Vivek. Thanks a lot for that. Well, let's go across to Vamakshi. She's here to tell us about Vodafone Idea and JBM Auto. Two more stocks on our radar. Vamakshi, morning.
Well, good morning, Nigel. Let me first start off with Vodafone Idea. Board meeting is scheduled on June 13th. They will be considering a proposal for issuance of equity shares as well as convertible securities on a preferential basis. After following the fundraise, this seems like another measure taken by the company to strengthen its balance sheet. They're expected to make this proposal towards vendors. So overall, it bodes well for Vodafone Idea. I expect the stock to open higher today. JBM Auto, also on our radar, its arm JBM Electric Vehicles has signed an agreement with MUON India Private Limited, which is a Macquarie Group company, and under this agreement they're expected to supply nearly 2,000 EV buses and they will be deployed over the next couple of years. JBM initially received an order of 43 buses in the month of April, and the delivery for this order actually started only in 1 month of receipt of the order, and this entire order of 43 buses was completed on June 10th. So overall, bodes well for JBM Auto. Expect the stock to open higher today.
All right. Vamashi, thanks very much for that. Poonawalla FinCorp is the next one which we're focusing on. Abhishek is here to tell us why. Abhishek, morning.
Morning, Prashant. So, stock was down over 8% yesterday in trade. Now, bulk trade data shows that Abhay Butra, who is the MD of the firm, sold about 72 lakh shares at about 437 per share. This aggregates to about 332 crore worth of selling that took place in the counter yesterday. Now, holding pattern does show that he must have held 78.2 lakh shares, which is now about 97% of that got sold yesterday in trade. So stock closed below 200 DMA yesterday in terms of the price movement, and yesterday's volume was the highest that you are seeing in last 3 months, coming in at 643 crores. Back to you.
Okay, that's Poonawalla Finance. FinCorp, we'll keep an eye on that. Abhishek, thanks very much for that. Well, with that, let's quickly recap our list of top stocks to watch this morning. The ones that have positive news flow around them are, of course, the entire cement pack, RVNL, Vodafone Idea, JBM Auto, and Poonawalla FinCorp. Stocks with some negative news flow around them are IRB Infra, Honasa Consumer, Interglobe Aviation. All these are on the back of expected blocks. TRIL, Transformers and Rectifiers India, and KIOCL. Okay, with that now, let's shift the focus to the commodity markets and find out what's the latest over there. Manisha, morning. So those yields are still high. That dollar is still high. Okay, by the way, Manisha, as we're talking to you, we're getting shots from all the new ministers who are now heading to their ministries, taking charge. Ashwini Vaishnaw, I don't know which one he's taking charge of right now. Is he heading to railways or INB? Because he's got a couple of different portfolios. But of course, he's the man in focus. And of course, someone who's been well celebrated for his role in railways. The market, of course, has been extremely happy with the way policy has centered around a lot of the railway PSUs. And we've seen what's happened to those stocks. And the market would hope for continuity, more policy reforms when it comes to the Indian railways. So, yeah. And also, of course, electronics, IT, all of those fall under him. So that's Mr. Vaishnav, of course, in sharp focus this morning. But Manisha, back to you. I was saying that, dollar is higher, yields are higher. What impact is that having on the commodity universe? What's top of mind?
Oh, well, the last week wasn't so great for commodities, but this week we've seen some support coming back, and that is because of the FOMC meeting. Well, the two-day meeting begins today. The U.S. inflation data also is tomorrow. So those are going to be a couple of important events to watch out for. But in the meanwhile, we have seen some opportunity buying in many commodities. So the crude oil price has gained up by 2.5% overnight. The U.S. summer season demand seems to be supportive. Also, there is U.S. crude purchasing for its petroleum reserve as the WTI is below 79. That seems to be supportive as well. And then Goldman Sachs, UBS believe that the third quarter of this year could be looking at strong demand, higher demand, and a deficit coming back in case of crude prices. So markets really doing a bit of a forward buying right now. Some support is what we've seen come back in metals also, with copper prices are off its 5-week lows. Gold and silver trading in the positive right now. Iron ore and zinc prices gained up by nearly a percentage point overnight. Many of these commodities are buy on dips. I mean, even with the kind of movement that we've seen in commodities, it still is not a sell kind of a market. Buying on dips continues, and that's exactly what we've seen in many of these.
Okay, all right, Manisha, thanks a lot for joining in and giving us that neat wrap of what's going on in the commodity markets as well. For the time being, we slip into a short break. On the other side, we have Amnish Agarwal of Prabhudas Lilladher who will be joining in to help us out with some fundamental analysis. Stay with us. Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. As promised, Amnish Agarwal, Head of Research at Prabhudas Lilladher, joins us. Hi, Amnish. Thanks a lot for joining in. Well, I wanted to ask you on Interglobe Aviation. It's been a dream stock, made big returns, holds bulk of the market share as well. But now you have, large trade that will take place. Earlier, we had Mr. Gangwal that sold some stake. Now you have Mr. Bhatia as well that will be taking some money off the table. Your approach to this particular stock?
You see, Indigo has done particularly well. If you look at last year or so, the stock has moved up very sharply and actually defies the logic. Usually, there's a saying that airlines rarely make money. But I think currently we are sitting in a very sweet spot, more than 60-65% market share, fast growing economy, lot of, you can say, pent up demand which is there. But in terms of financial, everything seems intact. Now, as far as promoters reducing their stake is concerned, I think, yes, both of them have been cutting down or paring their stake. And I think it is a second or third occasion it is happening. But I think it will not have much bearing on the stock, at least in the longer term. But yes, if the stock their holding comes down below a certain level, then obviously then it goes on the lines of like we have got many professionally driven companies, but then you need very strong hands to run that. But as of now, I think it's not alarming or is not something which should stop any, you can say, any view on the company, which should change any view, basically.
Okay. I think we are getting a soundbite from Mr. Ashwini Vaishnaw, so let's just listen in to what the minister is saying.
आगे इम्प्लीमेंट करने की जिम्मेदारी दी है प्रधानमंत्री जी ने, मैं उनका आभारी हूँ। हृदय से प्रधानमंत्री श्री नरेंद्र मोदी जी को धन्यवाद देता हूँ। प्रधानमंत्री श्री नरेंद्र मोदी जी को धन्यवाद देता हूँ।
आप स्टाफ मिनिस्टर रहे, कैबिनेट में सर और रिस्पांसिबिलिटीज के बारे में बताना चाहिए।
Thank you. Not much sort of on the agenda ahead, so to speak. Amnish, just getting back to a lot of the political announcements that have happened in the last few days. Yesterday was the first cabinet meeting, and the first decision of Modi 3.0 was about extending the benefits of the Pradhan Mantri Awas Yojana, Grameen. So 3 crore more rural houses to be constructed. I don't know. I mean, what's the stock market play? Should you look at housing finance companies focused on the rural areas? Should you look at some sort of home improvement stocks, because home improvement stocks are more linked to the big urban housing push, right? I mean, either you play builders. How do you play some of these rural themes like Grameen housing?
It's very tough to play. For example, when it comes to the basic materials, for example, you will consume cement, okay, you will consume steel, but the steel there also will not be something which will come from, say, whether it is Tata Steel or JSPL in terms of, say, your long steel. So cement is a very, very direct play on that. That is one. Then to some extent, some of the companies which are into, say, wires and cables, they could benefit. The companies which are into PVC piping and all, they will benefit. Even, say, in terms of whether it translates into your other building material like a wood panel, etc., or sanitary ware. So that is something which is not seen, because usually the usage of non-branded mass market products and many products of the companies which are not in the listed space, that has been seen in the past. But I think broadly for the economy, it should be a booster, but particularly for the basic items, whether it is, you can say, cement, like I said, wires and cables, okay, to some extent, I would say pipes, etc. I think they seems to be the clear-cut beneficiaries. Even in terms of housing finance, the ones which will benefit will be the, you can say, rural or the low-cost housing. So no very big companies, okay, are likely to be the major beneficiaries of any such.
Not big, but I mean, any of the smaller housing finance companies that you focus on, the ones that may have a portfolio that has greater exposure towards tier 2 cities, the urban poor or tier 2 or semi-rural. Any such housing finance names you want to place on the radar?
Okay, you see, the houses which are usually built under the PM Awas Yojana, so the capital outlay on them is very, very low. So I think even the stocks like maybe say Canfin, or maybe I think even those may not qualify. Some of these you can say absolute, your low-cost housing companies will qualify for that, but we don't have any firm view on these companies as of now.
Okay, all right. No, got that. Amnish, a lot of block sales, right, back to the market, and large ones. There is Indigo, Honasa, IRB, and more coming is what we're hearing. Any quick thoughts?
The main thing is, if you look at, many people would have been waiting on the sidelines because of the elections. Now elections out of the way, market doing well, outlook on monsoons positive. Okay, I think it is now the time that some of these private equity players or some of these promoters, they might look at, say, taking some money off, because there might be some lurking fear or some fear in the background that how will this government perform now? Will there be change in some policies which can happen? Because whatever was there in the election results are also indicative of some change in the trend or something which the current regime might need to do on the ground. So I think usually now with the, you can say the clarity being there is bound to be, you can say, some reallocation here and there. And I think that there is nothing which is very extraordinary in this.
Okay. Anish, stay on. We'll come back to you in just a bit. We've got Anuj now joining in to talk about what he makes of the market. So Anuj, the event is finally done. The portfolio allocation is done. It's all over, I think, from a political perspective at least. What next for the market?
Yes, indeed, Surabhi, morning. And, the big takeaway is that Modi 3.0 is nothing but Modi 2.0 continued. And I think that, from the market point of view, is most important because there's no change in the big four. And the key takeaway is that perhaps there's no pressure of the allies. And in that sense, we could see continuity in terms of the government. And the market will, I think, today fully price in the election verdict. And from here on, it will be about the union budget and the 100-day agenda, etc. I had an interview with Rhythm Desai yesterday, and the point he made was that the pace of reforms could actually increase instead of slowing down. So that also, I think, would be a positive for the market. The other big positive is something that you also referred to yesterday, the big mutual fund inflow, 34,671 crore. That's $8 billion in a single month. And that's the kind of money which is really propelling the market. In terms of trade setup, normally when you see the FIs shorting, not only do they cover the shorts, but by the time the market tops out, they actually become net long. So I think there's still some scope there. Yesterday, about 48,000 net shorts were covered, but we are still at about almost 1.4 lakh short contracts. That will be seen in the next plate. We started with net shorts of 3.55 lakh contracts, and we are now sitting at 1.4 lakh contracts net short. So I think there's still scope for some more short covering from the FIs. In terms of the Nifty levels to watch, I have now converted hourly charts because daily charts are all over the place. 23,100 to 23,248 is the first support, and then 22,840 to 22,915. On the upside, the first resistance, obviously the all-time high of 23,412, and then 23,500 to 23,600, the option zone. The Bank Nifty still has about 1,300 point differential between the current level and all-time high. 49,622 and 49,500 are the near-term supports, and 50,252 and 50,500 the near-term resistance. As always, I leave you with the quote of the day, and this one is actually based on the game of darts. If you hit that target every time, it's either too near or too big.
Aim high, aim far. Keep the standard, keep the bar high, I guess. All right, Anuj, thank you very much for joining in as always. Prashant, it just got me thinking, right? We're talking about all these block trades and all of this fresh paper coming in the not fresh paper, secondary paper coming in the market. Takes you back to a point that Ramdev made, and it's true, right? If you don't have the blocks happening, if there's no mal in the market, there's 34,000 crores of money that's flowing in. What will it buy? So maybe in a way, all the heightened block trade activity is actually a good thing. There's more in the market.
Not just that equity, and it's happening because it's getting absorbed, right? Because it's getting absorbed up on how. Usually, typically, when block sales used to happen, we used to get sharp corrections, and then stocks used to stay down. Now they start down, but they usually end down.
Shows the depth of the Indian market.
Absolutely.
And a lot of the buyers are actually mutual fund houses. A lot of domestic institutions lapping up this.
There is also
stock.
IPOs, which are, I think, which will accelerate now. Now that this is done with, so fresh paper basically is the point, and we'll have a few others, large ones. I think we had Anuj talk about Rhythm Desai, the conversation with Rhythm Desai. There's a conference here in Mumbai, but listen to some of that commentary from him.
Every single day, the domestic investor is putting money to work. So where's the space for the foreign investor to buy? Because in the market, you need one seller and one buyer. So I think the seller will emerge now, which is the corporate issuer. So corporates will start raising money, and that is how foreigners will get space to buy. So if you ask me for a prediction, which I'll make, I think in the next 6 months, foreign buying will return into India. So in the US, demographics started reversing in the start of the millennium. And the baby boomers started retiring and they started withdrawing. That's not happening in India for the next 15, 20, 30 years. So we could have a very long change. And on other areas like infrastructure build, like energy transition, like manufacturing, I think it will accelerate further. We have so much more road to travel on this. It's domestic cyclicals. I think the private banks look good. The consumption stocks across the spectrum look good. And wherever there is any room for valuation, just, that should be a great area to be. I think industrials look good. You have to be a bit selective because the valuations may be elevated in some places.
All right. Well, let's move on then and talk about the cement space. You have Mangesh Badang, the Senior VP Research at Centrum Broking, who joins us on the show. Hi, Mangesh. Good morning and good to see you, Ben. Well, the news that's coming in overnight is that the cabinet has decided to further expand the Pradhan Mantri Awas Yojana. How much of a benefit will it be for cement demand? And give us your quick analysis as well. That could help in volumes, but pricing to this particular scheme will be relatively lower in comparison to trade price.
Hi, good morning, Nigel. Thanks for having me. So this has been a really good, big demand booster for cement sector. So in the past also, during COVID or when the actual housing demand was lower, PMAY was actually a key driver which drove cement demand in the markets. So even with this new move that they have said that additional 3.1 crore houses will be built, I think that is something that should definitely drive demand for the sector. And if I have to look at ballpark figures, because generally this is not a standardized houses and it's a credit linked subsidy scheme. So basically, if anyone is going for the houses, they would provide either the interest rates will be incentivized or there would be some amount that would be given up from the government side. So, predicting demand for this becomes a challenge. But even if you assume that some of these will get completed the way or the run rate will continue the way it had happened in the past, I think it has the potential to increase demand by up to 200 to 250 bips for the sector, which is definitely a big number from just one scheme. When it comes to pricing, I think this cement will be sold in the trade market because there is not one buyer who would be buying it in bulk. And these are like small IHB houses or, individual is the one who drives construction of these houses and not the government. So it's not the non-trade segment wherein this cement will go. I think it will be part of the trade segment. So pricing will not be lower, for these houses compared to what you see in the other segments.
Very encouraging then to hear that, Mangesh. Yes. Give us a couple of numbers. What are you forecasting in terms of a growth, cement demand growth for the industry for this year? Is it in that vicinity of high single digit? And post this, how will you up your estimates? For FY25, maybe you won't see that much of an impact, but FY26 as well, this could be a bit of a booster shot. So 200, 250 basis points is the number you're working with. Could you give us the growth numbers?
Yeah. So see, our estimate for FY25 cement demand growth is close to 5 to 6%. Key reason being we are expecting demand in the first half to be very weak. And in fact, in the first quarter, we are expecting some contraction in demand. Last year in the first half, demand growth was almost 16%. And because of elections and timely monsoon, we are expecting that demand is going to take some time before it picks up. So I think second half is where it will pick up. And high base of last year would keep the growth lower at around 5%. And then we will go back to that 8 to 9% kind of trajectory from FY26 onwards. See, if you look at the overall capacity that is coming in the industry, we were expecting that incremental supply could be higher than what the incremental demand is going to be. But with this kind of demand booster, and if definitely 100 and 150 to 200 bips additional growth comes through some of these schemes, then obviously we are looking at demand getting matched by the supply that is coming in. So overall, I think it should be positive for the demand as well as pricing. But I don't see too much of I will not be building in too much of an upside right now on the numbers, at least on the FY26-27 estimate.
Mangesh, hi, the 5% estimation you've given for the current year in terms of volume growth, that bakes in the 2.5% push from PMAY? Or will that be over and above?
So as I said, it's very early. Even if they announce the scheme now, I think it is going to be a continuation. So PMAY was active even in the last year. And as I said, it's a credit-linked incentive subsidy. So basically, the individual has to go ahead and build those houses and not the government. So at least on the urban side, it's the individual who takes this precedence, but at least on the rural side, there would be some houses that will be built, but very difficult to gauge that FY25 there would be an uptick in demand. Whatever happens, I think it will be FY26 or later.
Got it. Mangesh, before we let you go, just quickly, your top picks in the sector?
So in the large caps, we like Shree Cement, and in the mid caps, we like Birla Corp and JK Lakshmi now.
Okay, all right, Mangesh, always good hearing your thoughts. Thanks a lot for joining in and giving us a quick analysis. So as Mangesh said, he believes that this enhancement in terms of the number of houses that will be developed will be good on the demand parameter, good on pricing as well, and has scope to improve the industry growth by around 150 to 200 basis points. Well, let's slip into a short break. You come back, Mitesh as well as Sudarshan, they'll be waiting for us on the other side with some technical trades.
Okay, well, there's about 6 minutes to go for the pre-open session, and it's going to be a good start, about 18-20 points higher, not the 40 which was being indicated early on about 40 minutes back. Well, Mitesh is with us, and so is Sudarshan with what they'd like you to do as we begin another session. Gentlemen, good morning. Good to have both of you here. It was all about stocks, wasn't it? Lots of action, vibrant market, but the indices cooled off. The Nifty was flat by close. Mitesh, what would you do?
Good morning, Prashant. So yesterday, I think, we got not exact double top, but two highs around the same level, 23,350, 370 zone. So I think till that is crossed on the index, I would want to, wait it out. Maybe a dip would be a welcome entry point. So anything close to about 23,100, if you can get it, take a 100-point stop and, trade for a retest of 23,370. Having said that, I think it's the stock side, as you are rightly highlighting, is the buzzing area. I think individual stocks are doing very well. There is some sectoral themes also. So we are trading with long bias clearly on the stock side.
Got that. Sudarshan, morning. What about you? How would you trade the indices first?
Yeah, good morning. See, the Nifty has reached a new lifetime new high. I've explained that lifetime new highs are bullish. So the trade is to be on the long side of the market. But we are entering into a process of consolidation. We'll get a lot of intraday dips like the ones we got yesterday. If you see a 50 to 100 point intraday dip, go long, whether it is for an intraday trade or for a carryover trade, doesn't matter. If you're buying 100 points lower than the highs of the day or the open of the day, it should be comfortable. So do that, stay on the long side, and also keep your volumes low. Consolidations can be very choppy.
Okay, all right. Good morning, gentlemen. Sudarshan, you go first. Tell us the individual names that you're tracking today.
Yeah, actually, it's all about stocks, as Prashant said. And HDFC Life is a buy with a stop under 540. MCX is a buy with a stop under 3,310. Zydus, now pharma is picking up. A lot of pharma companies are giving buy signals. Zydus Life is a buy with a stop under 1,000. And Alchem is a buy with a stop under 4650.
Okay. HDFC Life, Zydus Life, and Alchem. Got that. Mitesh, what about you? Your picks?
I also have all buy calls. Yesterday we saw good breakouts happening in the cement stock. We had buy calls on HCC earlier and then BTH and Ultratech. Today I have a buy on Dalmia Bharat Cement. Recommend longs here with a stop below 1849 for targets of 1935. Fertilizer space was also doing well. So Chambal Fertilizers is a buy with a stop at 418 for a target of 440. The IT stock gave a pullback yesterday, and the positional sense is that all the IT stocks are looking in some kind of a short-term uptrend. So on a decline by Wipro around 473, 470, I think it's closed at 475. So 2-3 point decline should invite longs with a stop at 464 for targets of 490. And Nestle is a buy with a stop at 2510 for targets of 2650.
Okay, all right, gentlemen. Thanks a lot for joining in and giving us your call on the index as well as individual picks. We reconnect with you at 9:10 a.m. For the time being, slip in a short break. Come back. We'll focus on the pre-market rates. We'll also get a chat going with Kaynes Technology. Stay with us. Welcome back. In a few minutes, we'll get the pre-open rates. For the time being, let's continue our chat with Amnish. Amnish, thanks for waiting by. Yesterday, tech-related stocks were lower. Maybe the fear that, the Fed will not cut as soon as expected. I was looking at the Fed rate tracker as well. Now they're factoring in just one rate cut, and that too in November. But give and take everything, how do you approach the tech space, and what do you like from there?
Tech stocks continue to be weak, mainly because the visibility on the spends has not been that great. Now, if you look at the current situation, I think we are going to have election in several countries. Now, everything depends upon, first of all, the pickup in the, you can say, US and European markets. That is one. And second is the interest rate scenario. Now, if you look at the domestic setup, perhaps IT services is the only sector today which has got valuations comfort and some hope that once the interest rates get cut, there will be revival in the growth rates. So due to that, I think maybe next 1 or 2 quarters, the growth outlook still remains a little bit hazy, or it doesn't seem to be picking up. However, in the long term, there is hope that the growth rates will eventually revive, and that is why there could be some interest in the tech stocks as we go ahead, purely because of the valuations and because they have underperformed significantly from here on. Now, as far as your tech space is concerned, I think at the current level, one can, you can say, look at some of the stocks like, for example, LTI Mindtree is there. From the longer term, LTTS also continues to look good. And as are the stocks like, say, TCS.
Okay, Amnish, stay with us. You might want to hear in the next conversation, and we'll come to you on this. I'm talking about the entire EMS space. Kaynes Technology is on our radar. We recently had the veteran IIFL analyst, Renu Baid, with us. And we asked her what is the one pick. She downgraded the space. We asked her what's the one pick she likes in the EMS area. She said it's Kaynes. Well, Kaynes has seen good growth in the fourth quarter. The order book has also seen a near 10% surge sequentially for FY25. They got ambitious 60% revenue growth guidance. They're targeting a 100 basis point margin improvement. We have Mr. Jairam Sampath, Director and Chief Financial Officer at Kaynes, joining us now. Jairam, good morning. Good to have you with us here. Thank you very much for your time. Prashant this side. Beg your pardon. If I can start by asking you, away from the core EMS space, your plans in the OSAT and the bare PCB area. I think here there were some approvals and subsidy, etc., which was pending. There was some delay because of the Model Code of Conduct. Could you tell us by when are we expecting this to move forward? By when are you looking to commercialize these, these manufacturing facilities, and what should we expect here?
So thank you for having me here. Good morning to you all. So fundamentally, these decisions are pending for the new government formation, which you have seen has happened yesterday. And I think it's quite encouraging to note that the continuity is maintained. The same ministers are handling these newer portfolios. And I think this is the third term for this government on its agenda, reformist agenda and developmental agenda. So we expect these things to be taken up immediately. And maybe it's a matter of a couple of weeks when the final nod we expect. As far as we are concerned, we have given all the different information long back. And I think because of Model Code of Conduct, the other procedures within the government in terms of meetings, etc., could not be taken up. And now this will happen. So both the OSAT project as well as the HDI bare PCB project is on schedule. So we have also not lost the time. We have used it to shore up our activities in the other fronts. And so pending this particular approval, which are likely to happen in a few weeks from today, I think we are good to go. And we'll make up the lost time a bit during the execution of the project. So we are very encouraged and excited and look forward to a good conclusion of the project.
Jairam, if this approval, as you're saying, for OSAT and PCB comes through in the next few weeks, you aim to, I think you've put aside about 5,500 crores, right, towards capex here for these two.
Capex. Total capex is around 3,740 crores, and a lot of it is also funded by the government subsidies. So so we have a largish project compared to what we've been doing in the past.
Yeah. And so my question was, if this were to come through in the next few weeks, you expect to commercialize these by when?
Yeah, so as per the earlier program, it was FY26, the fourth quarter. And I think we still hold that timeline. So I think we will do whatever is required to, hasten up some of those steps which we had kept some buffers in. So overall project, I think, is on schedule now.
Mr. Sampath, so let's talk FY26 because I'm just trying to get a handle on, the kind of company profile that Kaynes will have by the time you reach that and start commercially operationalizing OSAT. So how much would be traditional EMS, and within that, if you could tell us how much would be aviation, space, and how much will OSAT? Basically, let's say 2 years down the line, what will be the revenue breakup of the company?
Yeah, so we have talked about this year being around 3,000 crores in terms of revenues. And we said that due to the kind of order book and the kind of sectors that are firing up now, the margins also will see some improvement during the FY25. And a similar growth rate is expected to be in the coming year too, the FY26. And FY26 fourth quarter, when I'm talking about the new businesses to start yielding revenues, they may not be very significant capacity utilization being the fourth quarter, but you will start seeing some revenues from there. So the way to look at it is without giving a guidance for the next year, but all I'm saying is that similar growth rates, 50 to 60% over FY25, you can expect for FY26 too. And I think the margins will hold stable. This is based on the order book and the other business profiles that we have assessed.
Okay. Hi, sir. Morning and good to see you in. You mentioned order book. What is the current order book and how much of it is exports? I believe exports are better margin business, so I ask you.
Yeah, so the margins are dependent not merely on domestic or export. It depends on the kind of sectors that we operate. Of course, we don't publish by sector, but suffice it to say that some of these sectors which are more tuned towards high-tech, low to medium batch size volumes, high variety sectors. So they are the ones where we are actually having the accent on the order book. So current order book, as of March, it was about 4,150 odd crores. And the order book is increasing at a rate anywhere between 300 to 400 crores a month. So I think the growth rate of order book continues, probably at the same rate or even a little higher. And as of now, to that order book, we have some more indications on the industrial side, on the smart meter side, and all other sectors too. So I'm pretty confident that this order book will continue its journey upwards. So by end of FY25, it will cross after completing the 3,000 crores for this year, may cross beyond 5,000 plus some crores.
You mentioned smart meters, and that's a very interesting space. Out of your total book, how much of it is smart meters? If you could give us that number. And you've told us about the revenue number for this year. What should the margin number look like? Because you have indicated that margins will improve by 50 to 100 basis points. So a comment on both these two. So smart meters and margins.
The second point, so in terms of margins, we're expecting about 15% EBITDA margins this year. That's up about 100 basis points compared to last year. And in terms of smart meter order book, the way to look at the order book is that eventually what we will have is the industrial and electric vehicle segment, which is about 42% of our total business, will remain in a similar vein because all other sectors also are growing. So while I'm not at liberty to tell you exactly what these orders have, several million pieces of orders have come in the smart meter area for us, and we have to kind of start executing. So this will significantly increase the possibility of achieving or exceeding even the guidance that we have provided.
Jeremy, your sort of long-term revenue target is $1 billion, right, by FY28. Now,
yes, it is.
That I don't know if that was an aspiration or a target, but now you got to get to it because the market is already pricing in you guys getting to it by FY28. Because if you look at some estimates and P ratios, etc. for 28, I mean, So my question is, can the opportunity size between now and then, and I guess that's what the market is building in, become sort of larger, which we can't see right now? I mean, along the way, can it become much larger?
Yeah. So what you see in the order book are the ones which are what we call the organic growth. Already customers who have approved us and who have been working with us, and we have got some orders in the past, and they have given us their future order book for so many. The order books for each customer varies between 6 months to almost, sometimes in some cases, we get up to 5 years worth of orders. So typically, on an average, the order book represents 1.5 years worth of business in our business as of now. And going forward, probably that horizon will improve a little bit, increase a little bit as the orders come in. And we have said also that between 50 to 60% growth rate, like a CAGR, if you will, over next several years. So yeah, FY28 now is in visible spectrum right now. It used to be an aspiration some time back. Today it's in the visible spectrum. And so that will be like we have mentioned, our target is to kind of get to about $1 billion, assuming that rupee dollar does not wildly fluctuate. So looking at about 9,000 crores or so of total revenues. That will include about 25% approximately will be the new businesses, semicon and the PC board businesses. The remaining will be the EMS business. So yeah, so we are on, I think as of now, whatever indications are there, we are on track.
Sure. All right, Mr. Sampath, we'll leave you there. Good luck with those plans. The stock has done well. Kaynes Technology is up about 130% in the last 1 year. And it's holding up in green in the pre-open. The pre-open, by the way, is flashing some green, about 20 points higher, 24 points higher on the Nifty as well. Let's get back to our technical expert, Sudarshan. So what's the call at 9:10?
Consider buying Alchem with a stop at 46.50.
Okay, Alchem would be a buy. And Mitesh, morning, what about you?
Morning, Surbi. I would recommend Chambal Fertilizers for targets of 440.
Okay, all right, got it, gentlemen. Thank you for that. By the way, the Bank Nifty is looking sort of slightly red right now. In the pre-open, some of the larger banks, they've been dragging their feet. Otherwise, the market, a lot of the PSUs, they could still start on the positive side of the screen. So that's the cue that we have from the pre-open session. Let's put the spotlight on the chemical space. Sonal is looking at some export data that we've got for the month of May. Sonal, what does this data tell us?
Well, there are some positive trends that we are seeing with chemical exports, something that was languishing few months back. Philip Cap, they have come out with a note. They say the specialty chemicals exports continued their volume-led growth in May 2024, and this is in continuation to the highest ever exports that they saw in Q4. Company specific, they speak about Aarti Industries, where May exports came in at 362 crore rupees, which is a 91% growth in monthly average exports so far in the quarter, that is April and May. The growth was mainly led by 88% YOY jump in volume. So it's a volume-led recovery that we are seeing. Company is one of the best beneficiaries of visible demand recovery that we are seeing in the chemicals industry. For Vinity Organics as well, exports of 94 crores in May, which was a jump of 44%. It was led by the jump in ATBS sales, which was up 40%, and IBB sales, which were up 28%, and 73% jump in other products. Atul Limited also saw 26% YOY growth in exports to come at 189 crore rupees, and the performance chemical segment, which is around 70% of their revenues, did really well this time around and is seeing some signs of demand recovery. But we cannot say the same for SRF because their May exports at 325 crore rupees was a decline of around 17% versus the average monthly exports. But this is a sequential decline, and Philip Cap says they maintain their positive stance on SRF because they expect agrochemical recovery to drive recovery going forward. There are some other companies as well. They'll come up for you on the screen. These are the wider or the bigger changes that we saw in terms of export numbers. Some of them have done well, the likes of PCBL and Clean Science, while Galaxy, Neogen, these have seen a decline in exports this time around.
Okay, thanks a lot for that, Sonal. Well, let's hop across to Hormuz. He's read a couple of brokerage notes on HCC and L&T Finance. Hormuz?
Well, very interesting initiation there from Elara, and that is on HCC. It's the first recommendation that has come in on the stock. It's a buy recommendation, a 63 rupee price target, which is a potential upside of almost 58% from Monday's closing levels. And it says that it is poised to reclaim its lost glory after a decade-long effort that has led to its financial health significantly improving. Now, what Elara is saying is that HCC is well positioned to capitalize on this 1.5 trillion rupees nuclear opportunity, which is a 1.5 lakh crore opportunity, considering its decade-old experience of executing in-house complex and marquee projects, its share in the hydropower capacity, and also its share in the civil nuclear power capacity, which is almost at 60%. So all of these factors make HCC well positioned there. Now, they also said that it can now bid for new contracts because of the recent credit rating upgrades, and also because its bank bank guarantee limits restrictions were lifted as well. So as a result, it can bid for new projects, and it is expecting a standalone revenue and EBITDA CAGR of 20% and earnings CAGR of 50%. Now, Antique has also initiated an L&T Finance buy recommendation, 220 rupee target, a 33% potential upside. It expects a 25% earnings CAGR, and it says that there are limited risk to the company achieving these targets, but all eyes on HCC after that initiation.
Oh, absolutely. In the pre-open, there's thanks, Hormaz, very much for that. In the pre-open, we've got about a 24-point uptick. The bell has gone, and mid-cap's doing better than frontliners. That's the first trend. The Nifty is actually at the flat line with a bit of a negative bias now. What's pulling it down? It's financials, actually. Look at banks straight away. Bank Nifty is lower by about 0.3%. ICICI Bank, Kotak Mahindra Bank, HDFC Bank, Axis Bank. Private sector names not working for the bulls today, and that's where the major drag is coming in from. ITC is also on the lower side of the screen. So these are the big stocks. Titan is on the lower side. Some consumer names. What's working? A couple of the PSU names. ONGC, NTPC, Power Grid, Coal India. So it seems PSUs is still a favored space in the market. And apart from that, you've got Mahindra and Mahindra that's doing well. About a 1% gain coming through. Britannia is doing well. So that's how it's cutting up. Early trends. PSUs get a green tick mark. Some of the rural-facing stocks, which at least sort of signify rural spending like M&M, they're getting a green tick mark. But financials are the watch point. The Bank Nifty is already down 0.5%.
All right, let's pull up a couple of these railway-related names. There's going to be continuity out there, and that's why, in fact, the street likes that. RVNL as well as Ircon, both of them top volume movers today. They, in fact, have opened up well in the green. Yeah, Poonawalla Finance as well. Yesterday, the stock was under some pressure because, one of the people in managerial positions did sell some stake. But today, in fact, the stock has bounced back close to around 3% in today's trading session as well. Hoodco, it continues to fly away. That's up close to around 7%. Hormuz told us about that note on HCC. That stock is up close to around 6% odd. So good up move is what we're seeing out there. What's not doing too well? Well, you have Honasa, that's down close to 5%. Couple of large trades. Interglobe Aviation is down 3%. And IRB Infra as well, down close to around 8% odd. But otherwise, a quiet-looking screen. The mid-cap index, though, that's the bright spot, up close to around 80 points.
Yeah, all the blocks have, I think, happened on NASA, on Interglobe. Lots of blocks, 1, 2, 3, 4, 5, I can count. IRB. So these are all the early blocks that our team was alerting us on.
Absolutely. And, the oil stocks, by the way, ONGC is one of the top volume-led gainers, right? Oil has seen about a 3% pop. I saw this call from, I think it was the Investec. Indigo is down. So it's basically a large part of it, of course, is what's happened overnight with oil. Big rally in oil. Producers jumping, users, of course, seeing a bit of a sell-off. And Indigo's got that block sale as well. In any case, I mean, at least on a day-on-day basis, not a positive sort of environment. Hoodco is up 7%. So 285 on Hoodco. It's the biggest volume-led gainer. It's followed by ONGC. NBCC is up 5%. Poonawalla FinCorp recovering a little bit, as we just mentioned. We got HCC with a 6% pop, 42 rupees, big volumes. Ircon is up 4%. Reliance Power is up 5%. Sterling Wilson Solar is up 4%. 789 on that one. TRIL sold off about 7-8%. There's a QIP, as Abhishek highlighted. That's transformers and rectifiers. It's up 3%. It's a SME name, Oriana Power. Largely in solar installations, 7% higher. It's had a vertical one-way rally. Some prominent names there as well. Bikaji is up 4%. Bikaji at about 700 plus. There is Donier and many more names. But you go down the list. Schneider is up 5%. But volumes are lacking if you go down the list, at least right now. So Heritage Foods is seeing a bit of a pullback. It's down 3%. It's had a one-way move lately. There is BPCL, which is down about 1.25%. Amara Raja had a large move, 2%, 2.5% lower. And there is PNC Infra, which is down 8%, 482, 481 coming through at this stage. IIFL is another one of those names which has had a move from 400 to 495. Once the audit, the RBI sort of required audit was completed, stock's seeing a bit of a pullback after a big move. It's down about 1.8% or so right now. KCP is another one. KCP is down 5%, as we had highlighted. Stock's done very well from about 175 levels. It rallied to about nearly 250.
Just one more, Prashant. This HCC call that Elara has put on, what Hormuz just told us, the market's taking note of it because Elara is saying that this is a turnaround story and you need to get on it quickly. Their target is, I think, 62, if I'm not mistaken. Let me quickly revisit that target. 63 rupees is the target, as they're expecting HCC to go back to its glory days and bid for the big project. So that's 7% up on that stock.
No, absolutely. And, that's about, 43 on HCC right now. Well, Lawrence Blanco is with us of CLSA. He's, of course, one of the most sort of keenly watched technicians out there. Lawrence, great to have you. Good morning. Thanks very much. I did see what you said on the 7th of this month. This is, of course, after the results came through. And you were basically looking at the big market sort of bull phases we've had. You looked at the 2000 to 2000 that period, starting about, I think, 2003 onwards. Then the GFC. Then you looked at the next move all the way till 2020, the COVID fall, and then this one. And your basic thesis was that the uptrend is intact. Lawrence, so why don't you sort of contextualize for our viewers what we've seen last week with the big volatility? Has that changed anything at all? And what would markers for you be?
Yeah, I mean, so from the longer term side, the idea behind that piece was just to illustrate that longer term trend that you've seen develop off the COVID lows is still very much intact. And to put it into historic comparison, the bull phases that you had from 2001 into 2008, that was a 600% gain for Nifty. Then it was followed by the 2009 to 2019 gain, which was over 450%. So, on that longer term trajectory, end of this decade, we're talking about targets between 30 and 37,000. So that's the longer term sort of runway that we're looking for the Nifty at the end of the day. But, in the shorter term side, it's been quite a frustrating move from February, because every marginal new high that we've seen the Nifty set, it's been followed by a short, sharp sell-off. And, the election results sort of played into that. It's the biggest sort of intraday decline that we've had since the 21st of January, being just over 6%. But it's also, comparing it to the 2004 election results reaction, the 2019 reaction, this is the quickest recovery of that initial decline that you saw from of 6% last week. So added volatility, but it doesn't change the longer term outlook on what we've seen for those trends in the market.
Okay, so Lawrence, hi, good morning. So outline that longer term trend once again for us, and the targets and the levels that you'd look at, since you think that this whole roller coaster doesn't change it.
That's right. I mean, we didn't violate any longer term trends, being the 200-day or 200-week moving average. And we're talking about these decade-long trends that you've seen in the Nifty from that 2001 low. So, to put into perspective, end of this decade, that's where that 30,000 to 37,000 upside target is based off those trends that we see now. And then the shorter term side, 21,100 is the 200-day. And on an intraday basis, that's what we got close to on the reaction to the results last week.
Could you just repeat the Nifty target, Lawrence? I think I heard you say 30,000. These are long-term targets, right? If you could just repeat them.
Yes, so that's end of the decade, right? End of this decade.
End of the decade.
Between 30 to 37,000. Those are the targets that we're looking at.
And something a little more near-term for us. So we got that. Those are big numbers, end of the decade targets. 30,000 to 37. We're 5 years off, actually. It's not that bad. It's not that long off. But anyway, 30 to 37,000 on the index. That's end of the decade. And maybe slightly more near-term?
Yeah, so, I mean, like we've said on a number of times on the interviews that we've had before, we think we're in the consolidation period here where the upside's sort of limited to this 23,700 to 23,800. So that's the shorter term upside potential. And really the level that we're sort of highlighting as where you accumulate or rebuild positions here is on volatility and corrections back towards the 21,000 area.
Hi, Lawrence. Good morning and good to see you. When I don't know, I would expect the Nifty to be at the higher end of that range, 30 to 37,000 at the end of the decade, going by the kind of momentum that we've seen and the way the markets have been moving. But we take your point, 30 to 37,000 on that. Give us a couple of levels that we're looking at in terms of, the global cues. The dollar index, the yields as well have popped up a little bit in the last few days. And both those two, they're important for an emerging market like India.
Yep, totally. So if you look at the dollar index, pretty straightforward. After that decline of 10% that you had off the September 22 highs, dollar index very much been range bound between 99 and 100. That's basically been the bottom end of the trading range for the past 18 months. And the top end's been sitting at that 106 to 107 area. And, we're sitting around 104. So very much towards the upper end of that trading range, but we're not seeing any dynamic set up for an ultimate breakout. And if anything, if we look at the longer term profile that we have for that dollar index, this trading range, which is in a lower level than the peaks that we made in September 2022, we think is part of a downtrend developing in that dollar index, but in the near term, clearly dominated by that trading range setup. And then as far as yields go, we did see quite a big reversal on Friday. For the 10-year yield in the US, we're basically looking at a trading range between 4.33 being the bottom end and 4.70 being the top end of that trading range.
Lauren, just clarifying one more point. When you were talking about more sort of near-term Nifty targets, you said 23,800 is the level that you're watching out for. And that's over what sort of a time span?
Well, that's a short-term time horizon. So we're looking at that over the next month.
Next month or so. Okay. Yep. Lawrence, let's talk, maybe sectors if you can, or sort of more specific areas of the Indian market that look strong to you.
Yeah, man, so it's quite interesting. With the coalition government, a lot of stories that we've seen is, PSEs want to start rotating out of them. From a chart perspective, we've seen major breakouts within that PSU space. The index, if you look at the broader PSU index, that is, since 2008 to 2023 had been in this broad cyclical trading range. We broke out in 2023, and we still think there's still significant upside for that index of over 60%. So we think that's a space that you can still accumulate in. If you want to get more specific, PSU banks is still in that uptrend. And if you look at the relative chart of PSU banks versus the broader banks index, the re-rating that you've had from the 2020 COVID lows has only retraced half of the decade-long downtrend the PSU banks have traced out versus the private sector banks. So PSU banks, PSUs in general, we think is still a leadership space. If you're looking at the defensive sectors in fast-moving consumer goods, as well as the pharmaceutical side, interesting post the election results, we've seen pharmaceuticals break out. So that is our preference to the fast-moving consumer goods, which have just got to the top end of the range and started to roll over. So prefer pharmaceuticals over FMCG.
Lawrence, if you want to go with specific names, most welcome to. Say 3, 4, 5 top ideas, on a secular basis, which you think are, which will make a lot of money.
Unfortunately, I have to stick to the sector overviews rather than the stock specific. So if you go back to that PSU basket, I think that's still a space that you want to be accumulating in. Going forward and using the volatility that we're looking at between that 21,000 and 23,000 level on the Nifty on pullbacks to accumulate in that space. And if you want to be more defensive, obviously the pharmaceutical space we prefer. And just to remain underweight FMCG as well as IT. We've seen a bounce in IT, but if you look at that relative to the Nifty, that's failed below the 200-day, and that still maintains its relative underperformance. Maybe one more point that I'll add to the IT side. If you look at software names across the globe or a broader software sector, you've seen a significant rollover the past 6 months and a breakdown from a topping pattern. So we do see, software names globally looking quite vulnerable. And I'd put the IT service names in India, part of that basket of stocks, IT stocks globally that are in downtrends and still remaining weak.
What about crude, Lawrence? It's been well behaved from our perspective, and we've seen that there's been this melt up in metals. But for us, we are tracking crude, and we're happy to see that one still hasn't made it to that $90, $95, $100 per barrel mark. Levels you're tracking on that one?
That's right. I mean, it's very much like the dollar index been in a trading range for about 18 months, where the bottom of that range is $70 to $71, and the top of that range at 99 to 100. So we have seen, a bounce Monday session of roughly 3%, but that basically leaves oil at the midpoint of its trading range. So we're not seeing any imminent breakouts on the energy side.
Okay, and Lawrence, before we let you go, maybe an outlook on the U.S. market itself. Every day is a new high for the U.S. indices. Do you see that continuing? What about these magnificent 7 stocks?
Yeah, but it's a point that we made in our recent note that, for the first time since the October 2022 lows, the percentage of stocks above the 200-day has actually fallen, and it's down to 62%, while the Nasdaq's made new all-time highs. Now, that's not a great timing tool, but what it does suggest to us is that, the move's getting more concentrated, and that's normally a sign of maturity. So again, just singling out that software side, which has really rolled over and broken down, relative to the semiconductor names, which is driven by the AI theme, remaining strong momentum trends, but it's getting far more selective, which is typically a sign of maturity. So yes, we're in an uptrend there, but you need to get more selective as this trend develops from here.
Lawrence, a savvy investor who's watching you live right now has just messaged me saying that 30,000 by the end of by 2030 is going to be underperformance.
Very disappointing.
So
that's why I said I'm leaning with 37.
It's got to be 37.
It would be the smallest advance of those decades that are broken down, right? It would be 300% to 350%, whereas the 2008 to 2019 was a 450%, and obviously the 2001 to 2008, that was a 650%. So in that terms, as a trend matures, it typically does slow down. But I think 30 to 37,000 relative to some of the other emerging markets that you're looking at, you should be quite happy with that.
Fair enough. Tempering our expectations there, Lawrence. Good talking to you today. Thank you so much for joining in. Great chat as always. Okay, so the market has pretty much stabilized. Not much happening. It's very quiet at the index level. Nifty is barely 20 points higher. The bank Nifty has now cut its losses. I mean, that's one good news for the bulls. That first big gash, that's still a cut, but it's a cut now. It's not a gash. Let's just put it that way. Okay, time to move on and look at some more corporate conversations. Torrent Pharmaceuticals has entered into a non-exclusive patent licensing agreement with Takeda to commercialize a drug for gastro disorders, vonoprazan, if I got the name correctly. Well, to talk about this and, of course, the company's outlook for this year, we have Aman Mehta, whole-time director at Torrent Pharma, with us. Aman, great to have you with us on the show. Please tell me if I pronounce the drug correctly or not. And let's actually start there. What is the potential? This is a non-exclusive tie-up. So how does it work and what's the revenue potential?
Yeah, the drug is called vonoprazan. The innovator is Takeda Pharmaceuticals. So this is in the market of GERD, which is essentially acid reflux. The current market of GERD is dominated by PPIs, and that's about an 8,000 crore market. We think this is promising because this is a new treatment approved by the FDA for GERD after a very long time. There are some benefits that this provides over the existing standard of care. So it's early days to talk about the exact potential, but the market potential itself is significant in India. And that's why we feel this is an attractive new launch for us. And it is a non-exclusive patent in the sense that there could be a few other licenses that Takeda could grant as well.
Oh, fair enough. And GERD is important. It's personally important. It could be a drug that I'll watch out for as well as it comes to market. But, some sense on what has been the global size. And this would be, of course, only for India, right, that you've entered into this tie-up with? Or could you be looking at taking this drug to other markets as well in association with Takeda?
No, as of now, it's only for India, for us. The rough size, I believe, of the drug in Japan is close to $600 to $700 million. Globally, it's close to $1 billion. So it has become quite sizable.
All right. Hi, Aman. Good morning and good to see you in. This is Nigel on this side. You want to talk about business and various aspects as well. But I want to clear the air first on that inorganic growth opportunity. It is widely reported that maybe, in fact, Torrent is partnering with some PEs and could be looking at Cipla. Could you tell us, were you all interested? Are you all interested? Or is this completely out of whack and you all are not interested at all?
No, I think we can't comment on specific rumors or specific articles that come out. There have been several such rumors that have come in the press over the last several years. So would want to refrain from commenting on any specific one. But typically, we do look at M&A quite seriously as a core growth strategy. If you see over the last decade, we did decide to focus on India as a core of the M&A approach. Over the last 7 to 8 years, there have now been 3 large acquisitions that have been successfully integrated. So M&A being a core of our business model, we tend to look at as many opportunities as possible, but our appetite remains in the same scale that we've been looking at in the past, which is, say, in the range of 2,000 to 3,000 crore, 3,000 to 5,000 crore range, particularly for the India segment.
Okay, all right. So you're leaving it open-ended for now. But Cipla will be a far larger, asset, if at all. So we'll have to keep an eye out for that. But you're clearly saying that you all have done inorganic growth and you all could be looking at as well without commenting specifically on this particular asset. Let's get back to business then. What was impressive in the past quarter was margins at around 32%. It's at a multi-year high, I think an 8-year high out there. Guide us in terms of the margin outlook from year on. You were hinting at that there could be some improvement. What is the band we work with for FY25, FY26?
So there's two things playing out. Last couple of years, two of our export markets were facing a tough time, Germany and Brazil. Germany, we had a loss of tenders. In Brazil, the currency impact was quite negative, which in the FY24, the previous year, has corrected in a significant way. So that has helped quite a bit at the company level. As a result, what has also happened is that our share of branded markets, branded businesses in branded markets, namely India, Brazil, Philippines, Mexico, that share has now gone up to a total of 72%. So as that share increases and the share of the generic markets comes down, the margin would tend to shift up. That is where this year there has been a significant improvement. This trend, in our view, is likely to continue because we are not focusing much more on the generic markets. Our focus will remain on the branded side of the business. So focusing more on India through expansion organically, and the other markets where we've also expanded recently, like Brazil and Mexico. So if that trend continues of above market growth in these segments, then the margin expansion should also follow.
Aman, if you can talk about a little bit about the US business. Good morning, Prashant here. For FY24, the US business was down 10%. You've guided for a pickup this year in FY25. Could you tell us what are the launches which are planned for this year? Also a sense of what is the contribution of the Dahej facility to the US business?
Yeah, so we've had practically no new launches, in the last several years. So this year should be a rebound in terms of the number of launches because of the Dahej approval. Dahej has become the most important site for us now. So maybe somewhere in the range of 5 to 7 launches in Dahej is something that could give at least a bit of a revival to the US business. US has been generally a bit of a negative contributor for us, so we don't expect any major boost to the bottom line in terms of the new launches, but at least it should help us neutralize the negative contribution.
And the guidance is to get to between $250 to $300 million on the US business side in the next 3 to 5 years?
That's correct. That's something that we feel would be achievable. Generally, we've been in the 200 range, but due to price erosion and lack of new launches, it's been difficult to maintain that. But hopefully, as that trend reverses, we should be able to grow back to that level.
On this price erosion bit, Aman, so the expectation has been that, from large price erosion, it's gotten smaller, low single digits now. Then it'll kind of sort of become neutral, right? I mean, it should. Where are we at that in that process, according to you?
Our sense is that it's always a dynamic situation and changes from product to product. So at a broad level, yes, one can say that high single-digit erosion is probably what it's looking like. But it would all really depend on each product-to-product basis. Some products would be very high, some could be slightly lower, depending on what stage of competition they're in. So generally speaking, there's been a very similar trend that we've seen in price erosion. No major change in that sense.
So still high single digits broadly. I mean, if you were to put it differs product to product, but broadly it's still high single digits.
That's correct.
Okay.
Okay, all right. Well, Amman, a couple of other aspects then. You've told us about the operational performance as well. What about the debt number? The gross debt, the last recorded number that I have is around 3,900 crores. You could correct me on that number. You could tell us where is that number headed, how much lower? I'm assuming, provided you don't make any inorganic growth, because that will otherwise take this number higher.
Yeah, that's right. That's the right number. So FY24, we've repaid debt of about 1,400 crores. Net debt to EBITDA is now down to 0.87 in FY24. We believe the same trend of repayment should continue, which should bring the net debt down further below 0.5, so around, let's say, 0.4 to 0.5, and eventually become net cash positive in the absence of any acquisitions in the future.
And you have taken an enabling resolution to raise 5,000 crores, right? Well, how will it be? Will it be a preference, QIP? What is it? And likely in this year itself?
No, hard to comment at this stage. It's something that we do as just as an enabling resolution every year. Okay. So it really depends on the situation.
Okay. Aman,
right.
We'll leave it there. Thank you very much for that. Appreciate you joining in and sort of running us through that conversation. The outlook, as you see, going forward. So very much looking for acquisitions, but not in this. I mean, I think they said 3,000 to 4,000 crores range. That's essentially what they're doing, guiding for improvement in their US business. But overall, they're saying high single-digit price erosion in the US market. Those are visuals, of course, coming in. There was Mr. Piyush Goyal, and there are others as well along with him. And I think we'll have an opportunity for reporters to take questions, etc. In a bit from now. So that's the the stuff coming out of Delhi with a lot of the political aspect of what is being tracked now coming to a bit of a close. Continuity, I think, is the large sort of message from the appointments which have taken place. We'll take a break. We are back. Umesh Chaudhary, Vice Chairman and Managing Director at Titagarh Rail Systems, will join in to talk about his expectations. I think that's the one sort of sector which has been sort of government-led, big tailwind there. So we'll be back with that conversation. Stay with us.
Welcome back. Well, the markets are a little bit quietish, but a lot of stocks in the broader markets are flying away. IMFA, that's Indian Metals and Ferroalloys. We have been telling you about this from the time the ferrochrome prices started perking up. Chrome ore has been, in short supply globally, and because of that, chrome ore prices have been moving up. And for IMFA, they're getting their chrome ore from their own backyard. Could be one of the reasons why the stock has moved up. Keep in mind, in the last 1 year or so, if I'm right, the stock is close to have doubled. But that political outcome as well, Mr. Panda's brother winning the elections in Odisha, or the BJP making its mark in Odisha in the state elections as well. So a bit of politics, the fundamental business doing well as well. And that stock has been one of the big movers. Another one that I'm looking at is BHEL. It started off more or less flattish, but BHEL now has perked up in the last few minutes. So that's moved to the high point of the day. And GMR Airports, I understand that Surbi is going to be traveling in the next week or so. And one of those airports so-called travel-related plays, stock up close to 3%. Surbi.
I'm not going to Delhi, though. I don't think I'm contributing to their numbers. But yeah, I think any kind of travel would be good once we manage to do it. Back to the rest of the market, it's very quiet. There's not much changing on the large cap screen. The Nifty is absolutely flat. Banks remain the bit of an issue for the market. Banks and other financials as well. Shriram Finance, for instance, is cooling off after its recent run. You've got ICICI Bank and HDFC Bank. These are stocks that are still under some pressure. It is literally, some of the policy-related plays which are up and away. Texmaco Rail is up about 7%. We'll be speaking to a railway-related company in just a bit as well. But, you've got Hudco, you've got Aircon, a lot of the railway-related plays. Hudco, of course, is housing. There's RailTel, RVNL, there's BHEL. So once again, it's the same set of stocks that's moving higher. Something that our market expert Lawrence Vilanco also alluded to, expecting the PSUs to continue doing well. Let's see what's moving beyond PSUs. Again, Jupiter Wagons, similar sort of stocks on similar expectations moving higher. There's a Bikaji which continues to have a very good morning. And that's about it on the screen. Shakti Pumps is up about 5%. There's HCC, which we pointed out because of the Elara note. So these are some of the smaller names that are faring well. Actually, the market breadth is still holding up quite okay. You've got almost 1,400 stocks advancing to about 800 stocks on the declining side. So that's the shape of the market so far. Right, let's move on then now and get you another corporate conversation. Domino's Pizza has crossed the 2,000 store mark in India. Their last 500 stores have come only in the last 29 months, and the company expects to add 180 stores of Domino's in the current financial year as well. To talk about this and more store openings and the business strategy going forward, Mangalam caught up with Sameer Khetarpal, MD and CEO of Jubilant FoodWorks. Listen into the conversation.
Domino's has about 20,000 stores worldwide, and India is about 2,000. We are the largest single location outside of US. it's a big opportunity, right? That's how I see it. We are still scratching the surface. Who would have imagined 29 years ago we will be 2,000 stores and India will be the largest market outside of US in terms of number of stores for Domino's worldwide. I do believe the potential in India, the growth rate, rising consumption, and how Domino's have innovated for customers on value, delivery, great taste, we are going to grow. I'm very confident of it.
All right, so let's put some numbers to that confidence that you have. You know, you've always said that 10% of your revenue growth in a year should come from store expansion. The other 3-4% comes in from like-for-like growth. This year, you have a target of 180 stores to be added. That's about 9%. Should we expect a pickup in like-for-like?
Yeah, so I think it's a great point that you are making. I did qualify that in the last earnings call that we are seeing a momentum in our like-for-like growth. Feb, March, April, they all 3 months where we've seen the acceleration. So I think that from that standpoint, I'm just reiterating that momentum continues. Backed by 4 things that we have done, we have moved from 4 regions to 7 regions to be operationally strong, led by very strong market makers who understand physical digital businesses. Second is our campaign. It happens only with pizza. We rebranded, refreshed ourselves into winning share of occasions. Third is we've focused very heavily on delivery excellence. So I think we continue to progress well on the dimension of delivery excellence. Last quarter was our best ever delivery performance in terms of speed and time. And lastly, customers have been telling us that, hey, delivery is something that they would like for free from Domino's, who's always known for renowned value. So therefore, we did free delivery during the IPL campaign. We are carrying it through to the World Cup. So very delighted to see the momentum continuing.
All right, incredible. So, you know, I just wanted 2 points then. One, you said free delivery is what you've extended. So would you at some point, look at making that delivery chargeable, because that has a direct bearing on your margins? And secondly, with this free delivery, continuing into the first quarter as well with the World Cup, all these events that we're looking at, what is the targeted LFL, at least on delivery? Because the fourth quarter, it was dragged down. The overall LFL was dragged down by dine-in. If for this year, you could give us a target of LFL in both delivery and dine-in.
Yeah. So firstly, last quarter, like-for-like growth for delivery was 7.8%.
Yes.
And for the last 3 quarters, we've seen positive like-for-like growth for delivery. And therefore, it's a worldwide trend that is that we are witnessing, where delivery salience is going up. Customers are going lesser inside the stores to dine in, specifically for QSRs. And therefore, we double down on delivery to add more fuel into, or more money into customer wallets to expand. So that is what is really happening over here. I think the momentum continues this quarter for sure for us. And on delivery, we also launched specifically 99 rupees offerings for dine-in customers. That has, we believe, will arrest the decline in dine-in. Again, it is about great functional experience, value. So I'm quite positive delivery like-for-like will be positive throughout the year. I'm refraining from giving up one particular number, but we continue to see the momentum, and we believe we'll be able to arrest the decline in dine-in, therefore have a much better overall like-for-like growth story.
So if you had to reiterate, roughly 10% store addition in Domino's this year with 3 to 4% LFL and some margin improvement likely this year?
Yes, I think this will. So I think the margins are, like I said, we have bottomed out. We did invest now. This quarter was also about getting the growth back, and with 50% fixed cost in our business, it flows down if the growth, same store growth comes in. And then really tightening on the cost. So teams have been very frugal and focusing meticulously on cost per delivery, rentals, electricity, LPG, everything. We are like tightening our belt.
Let's talk about the other parts of your business. DP Eurasia, 2 months consolidation. gave you about 200 crores of revenue, 26.5% sort of margins. This year will be a full year. So do we annualize it to say about 1,200 crores or anywhere between 12 to 1,500 crores?
Yes, I think we'll share more details on it. We are the first time consolidating, but yeah, it's a very profitable business. I do want to leave our viewers and investors with one. It is PAT accretive to us. And that is not going to change. And that's we knew about this business for last 3 years through board seats and therefore had a ringside view. It's an excellent team led by the founders who built the business extremely frugally. And there's something for India to learn from there. 95% stores are franchisee owned, so less of corporate stores, very capital efficient business. And let's not forget the brand Coffee, COFFY.
Yeah.
Turkey is a country where you don't have the prevalence of pubs and bars. So coffee is a big hangout culture for the youth over there. Very high throughput per store, some of the highest that I have seen in a store. So great franchise, great set of team, very PAT accretive, asset light, and that is what we're going to see in coming quarters too.
Can't let you go without a view on Popeyes as well as Hong's. Do we see you cross that 100 crore per year revenue mark on Popeyes this year? 120 crores?
Yeah. That is in fact, that is in the bag, I would say.
A little more than that then. Tell us how much more?
No, I will not give a number because I want the teams to focus on great product, great service.
Okay.
I will once we get to 100 stores, but teams are executing flawlessly on that one. I can assure that on that.
Would you this year grow faster than competition just the way you have in the fourth quarter?
I don't know about competition, but definitely will grow faster than what we have grown in the past, and I acknowledge that. But hopefully versus the competition too. Given that we have given the pace of store expansion, we are not slowing down. I do see some slowdown overall in the industry.
A bit of a yummy conversation there, but I think we'll have to continue our focus on the markets, which as we speak are not doing too badly. So all the frontline indices briefly moved into the green as we speak. But let's focus on the railways. You know, a lot of the stocks are buzzing around. This as Mr. Ashwini Vaishnav has taken charge as the railway minister in NDA 3.0. How are the hopes of continuity in the railway orders? How is the sector expected to perform from here on under a coalition government? And what is the outlook? Well, to discuss this and more, we're joined by Mr. Umesh Chaudhary, the Vice Chairman and MD at Titagarh Rail Systems. Hi, Mr. Chaudhary. Good morning and good to see you in. Continuity is something that the stock market wanted. And I'm sure as a participant in the industry, you as well will be quite happy to see continuity in terms of the ministry. Could you tell us how does this change things? The only worry that the stock market has is now it's a coalition government, so maybe the decisions don't come about. Your quick comment on that and then we get straight to business.
Sure. Good morning. Thank you for having me with you. And it's not only the stock market that wanted continuity, much more than the stock market, the industry wanted continuity. Particularly, you know, I mean, if you look at the growth that the railway sector has seen under the current railway minister, and then overall in the last 10 years under the Modi 2 regime, it was very important that this momentum that has picked up in the railways continues. And with the current railway minister, Mr. Vaishnav, continuing to be the minister, industry is extremely buoyant and very happy that this momentum is likely to not only continue but to accelerate.
Okay, all right, got that. So give us then a couple of numbers. What is your current order book? If you could tell us as on date, what is it? And what are the kind of order inflows you're factoring in for this year? A rough number. And if you could give us a comparative number as well, what were the order inflows in the past year?
Sure. So, you know, I would not be able to give you the current order book, but what we had declared with our last results in the March results, that our total order book was about 28,000 crores, in which half of it was our share of the joint ventures of the SPVs that we have got the tenders in, and the balance is split between the passenger and the rail and the freight side.
Okay, all right. And
the fresh orders that we are expecting, yes. I believe that you know, there is going to be a big spurt of the passenger trains. Wagon, of course, is already there. The freight wagon business the railways already, we know the targets that are there. The freight targets are very, very buoyant. But also in terms of the passenger trains, we have seen the railway minister in the past announce that we will be entering into the era of waitlist free travel and so on. So that obviously means that a lot of new Vande Bharats will come up. I would only say that we are creating capacity which is quite substantial. I've disclosed in the past that we are setting up capacity to be able to produce almost 850 passenger coaches a year between Metro and Vande Bharat, and we believe that the demand that is likely to come up is going to take up that capacity.
Mr. Chaudhary, and you'd said that you were expecting a large number of tenders on the passenger side, both from metros and Vande Bharat, right? So a lot of them in the pipeline. I think last when we spoke in May, you said that this is the Railway Ministry figure, 3,500 Vande Bharats to be added in the next 5 to 7 years. So yeah, the opportunity is there. Now, just a quick point, a detour actually, Mr. Chaudhary, Prashant here. There have been news articles, there have been a fair bit of chatter on social media, etc., about how maybe in railways you need maybe more capacity at the lower end, not just the Vande Bharats. There are two issues. One, of course, is price, affordability for Vande Bharats, which is at a premium, and of course, second, at the lower end, you need more capacity, overcrowding in trains, etc., etc. Because this is the third term, and Nigel started by asking, and you mentioned policy continuity with Mr. Vaishnav, but do you see any slight sort of change in direction? Maybe a little less focus on the Vande Bharat, maybe, but a little bit more on the other regular trains. I mean, just your thoughts on this debate.
In between, but whatever I could make out of the question, I'll try to answer that. If we look at the railways, what they have done is they have come up with different versions of Vande Bharat. So there is a Vande Sadharan, there is a Vande Bharat, there is a Vande Bharat sleeper that we are doing. There is a Vande Bharat chair car which is already running. So the Vande Metro is been announced. So number of variants of the Vande category. So let's not look at Vande Bharat as one type of train. This is one class of train. What does that class signify? It is a class that signifies better comfort, better safety, a higher quality train travel in general. And then it is being catered into, it's almost like the airlines. There are budget airlines, there are premium airlines, and there are business classes and first classes in international travel. So my personal understanding is that the railways is moving towards that. And there are different options that will be offered for the different audience or different clientele, if I may say so.
But within these, right, as you said, I mean, there are different categories in that sense, but could the focus shift a little bit from the premium Vandes to the lower end Vande Bharats? I don't know if that's the right way to ask you. I mean, do you expect a more focus there? And does that mean anything for your business? Yeah.
So yeah, I was about to say that as far as we are concerned, we are making trains. So we can make trains of different categories, of different classes. And depending upon what kind of trains are required by the market, the amenities which will be fitted into the train or the facilities that will be provided within that train will be adjusted accordingly. But having said that, on a larger scale, I believe, this is my personal view, that while the trains to cater to the masses will of course be in the future, and there will be a focus towards that, I don't think that will be at the cost of putting in trains that are also catering to the higher end of the spectrum. I always believe that the train that is being done by the railways, where we have been fortunate to be a party to this, which is the Vande Bharat sleeper version, will give a stiff competition to the airline and the hotel, because it will be basically a hotel room on wheels for a particular class of travelers. So I believe that the trains that will be there required or will be there in the Indian railway system will be catering to the different strata of the society, different requirements of the society. And in either which ways, our capacity is fully fungible, whether it is an ordinary non-air conditioned train or an air conditioned train. We would be able to cater to that to all these segments equally with equal comfort.
Sure. Mr. Chaudhary, you've guided for improving margins. I think FY25, the outlook you've given is about 10%, and gradually it could go up to 13 to 15% over FY26. Is that going to be a function of the fact that your passenger business will scale up? I mean, typically, what's the variation in margin between freight and passenger? And within passenger, if you could tell us, there's one day, and then there is a lot of the metro work that you're doing as well. So what will be the profile of your passenger book?
Sure. So as far as, again, when I spoke about fungibility on our capacity is also fungible between Vande and Metro. So basically, we will have a capacity to produce 850 coaches a year in what we are installing currently, which will be fungible between Metro and Vande Bharat. Right now, the planned capacity is half and half. Our capacity utilization is half and half. In terms of the margin profile for the passenger, and I speak about the passenger alone right now, as I had mentioned, that once we are able to reach a certain volume, right now we are in the very nascent stage of the business. Last year we did hardly about 3 to 4 coaches on an average per month. This year we should be able to increase that to about close to 15 coaches, and then thereafter 2026 will be the real jump, because the Vande Bharat production will also start. So the margin will move to about 10-11% with both the segments, without propulsion being manufactured by us. And we believe by FY26 and 27, we would be able to make all the propulsion or most of the propulsion required in-house, which will then improve our margin to about 15%.
Okay, just one last number, sir, before we let you go. What's the CapEx outlay for this year? How much are you spending this year?
So between last year and this year, we'll be spending about 1,000 crores, and that is already on stream.
Okay. All right, Mr. Chaudhary, we'll leave it on that note for today. Good luck with those plans. And now there's clarity. There is policy continuity in your segment. So I guess you and the markets will hope for the best. Well, with that, let's come back to the market. And we've got Mitesh back in. The dip has been bought, as is usually the case with this market. Mitesh, so what do you make of it? That's an interesting looking chart.
So actually it's become slightly easy. You get a dip, identify a good support pivot and try to buy it around that. I think even on an intraday basis working well. So the idea is to remain trade on the long side. And on the stock side, I have Bajaj Finance, which had a pullback yesterday, but the structure is very positive. So keep today's low as the stop loss 70.50 and look for a target of around 7,300 to begin with. And if that is crossed, the stock might go even higher. So quite a positive chart there. And the second stock, which I like, and I've been recommending FMCG also for the last few days. So Britannia once again has come on the radar. That's a buy with a stop just below levels of 55.40 and a target of 56.60 can be.
Okay, all right, Mitesh, we'll leave it there. Thank you very much. Those are sort of new trades coming in from Mitesh at this point. Look at HCC. I think there is a Elara note which is projecting a big upside for this one. Old player in the construction space, but it's coming back. New lease alive, 45 rupees right now on HCC on very large volumes as well. We'll take a break. We're back. We put the focus on commodities. Manisha comes in for that. Stay tuned.
Welcome back. So we've looked at the equity screen, which has managed to come back in the green. Let's find out what's happening in commodities. We've got Manisha back with us. She's in the studios now. Manisha, so what do you have your eye on?
Well, I'm looking at the sugar prices, and internationally, we've seen sugar prices being really, really volatile. It's been trading at multi-month lows and then multi-year highs in the last 1 year. So if you look at 2023, we were trading at 28 cents a pound, and then the prices dropped all the way down to 18 cents by May 2024. We're trading at 18.6 right now, and the markets do believe that this is perhaps the area where the sugar prices seem to have made a bottom right now. The speculative activity that took the prices all that way, and then in sense of all the at these current prices, perhaps seems to have been done right now. If you look at the international markets, well, the latest ISO report suggests that there is a deficit that they're looking at into the markets. So if last year deficit was at 1.12 million tons, this year is anticipated at 2.95 million ton. One of the reasons that you could be looking at support in the markets. Now, when you look at this year, this expectation is that we are looking at a record production and a record consumption in the global markets as well. So those are those numbers there. But the more important number is about the closing stock or the ending stock, which has declined by 53%. And this perhaps could be one of the reasons that the global sugar prices could be looking at some support going forward from here. Well, the markets are anticipating that with the kind of demand that we're looking at in the international markets could be supportive. This is the global sugar numbers, as I said. We're looking at record numbers in both of these senses there. Talk about the Indian markets then, and we have seen consumption here as well continue to grow. So if last year was at around 227.85 million tons, 29 million tons in 23-24 has been an all-time high, and an expectation that you could only be looking at higher numbers going forward. The market participants also tell me that these numbers also are inclusive of some smuggling that happens in the neighboring countries, and that is the reason sugar consumption within India shows higher. But nevertheless, we are looking at that number continuing to increase there. Now, important stuff really going forward is, as the new government has been formed, sugar as an industry in the next 100 days in sense of agenda also hopes that India could be looking at increase in MSP1, and second, a long-term ethanol policy is something that Indians believe that could be seen as we look at reforms and policies.
All right, Manisha, thanks very much for that. So that is essentially commodities in focus. Well, HCC is the stock I was talking about before we sort of took that break. Stock's flying, but Hormuz is here to tell us why. Hormuz.
Absolutely, and it's flying also up almost 14% now as we speak, and that is because Elara has initiated coverage on the stock. It's the first coverage that the stock has had in quite a while now, after all the debt resolution and all of that happened with it. It's initiated coverage with a buy recommendation. Its price target is 63 rupees, which compared to yesterday's close is a potential upside of nearly 60% on the stock. Now, what Elara says is that HCC is poised to reclaim its lost glory after almost a decade-long effort, which has led to an improvement in its financial performance. Now, what they also say is that HCC is well placed to capitalize on this 1.5 lakh crore nuclear opportunity in the country, and that is because they have decades-old experience in executing in-house and complex marquee projects. They have a 26% share of the country's hydropower capacity and a 60% share in India's civil nuclear power capacity. So all of these factors bode well for the company to capitalize on this 1.5 lakh crore nuclear opportunity. What they also say is that now HCC can also bid for new contracts after the recent credit rating upgrades. The ICRA had upgraded its credit rating in December. CARE had also upgraded it at the start of the new year as well. So that was a positive, and they can now also bid for it because the restrictions on their bank guarantee limits have been removed. So both these factors will lead to HCC enabling them to bid for new projects as well. Now, what Elara expects a standalone revenue and EBITDA CAGR of 20% between FY24 to 27 and an earnings CAGR of 50% during the same time frame because of the lower interest costs. So a positive initiation there from Elara on HCC, the stock up and about in today's session.
All right. Thank you very much, Hormuz. That was a great heads up, by the way, just before the market opened. That stock opened immediately about 7% higher, now clocking a 13% gain on the back of that Elara note. Vivek is with us. Vivek, all the blocks have happened on Indigo, IRB, Honasa. Run us through the numbers.
Well, you're right. We told you, earlier today and also late last night about how there were expected to be almost 3 large block deals. All of them have fructified, at the open itself. So the first one that we were tracking today is Indigo. It's the promoter entity, which is Interglobe Enterprises today, which has sold. Now they've sold close to 2% of the total equity, worth almost 3,290 crore worth of shares. Remember, they continue to hold even after today's block deal, over 35% stake in the company. Now the second stock on the radar is IRB Infra. Surprisingly, remember, just 2 weeks ago, had the promoter entity selling. Today, another large private equity investor, which is Sintra, which is an associate of Italian company Ferrovial, sold almost 5% stake in today's trading session. They held close to 25% stake at the end of Q4, so they will continue to have around 20% stake after today's block deal as well. There is a lockup of 150 days on further sale of shares, after today's block deal. Now, the deal, when you're talking about what was the total size of the deal, almost 1,900 crore is what changed hands. And lastly, Honasa Consumer, again, 2% of equities changed hands. Two strategic investors, one Fireside Ventures, that had 5.2% stake, and Sofina Ventures that had 6.1% stake. Both of them appear to have paid 1% stake in today's block deal. Total size of the block was over 270 crore.
All right, Vivek, thank you very much for that. Those are visuals of Manohar Lal Khattar, former Haryana Chief Minister Manohar Lal Khattar, who's essentially taking charge as the Power and Housing and Urban Affairs Minister. Visuals coming in right now of him being felicitated and cameras. I'm not sure if there's going to be a soundbite. We've heard from other ministers who've taken charge, starting from, of course, Dr. Jaishankar in the morning, External Affairs. I think are also getting in sort of sound bites from the Minister of State for Civil Aviation or Minister of State for Oil and Gas, Suresh Gopi, the Malayalam film actor. I think there were sound bites coming in there. So through the course of the day, we will hear more from some of these newly appointed ministers. People are taking charge. Markets, by the way, come up very, very nicely. 60 odd points higher. We're at about 23,300 plus at the day's highest point. So not a bad look at all told. Well, we'll take a quick commercial break here. On the other side, my colleague Lata will connect with Nilesh Shah, MD and CEO, Envision Capital, and they discuss the NDA 3.0 portfolio distribution and what kind of impact it can have for markets and stock selection. Stay tuned.